Rahul, afternoon. Yesterday was a very smart pullback, but we did not sustain. How would you read it? And was it short covering alone yesterday, or some fresh long position? Because Bank Nifty gave a sense that, chalo, maybe the bad period for banks is over, but it's not sustaining.
Yeah, so very good afternoon. In fact, today is the first attempt to cross the 19,500 barrier, and we managed to do that only for some time in the first half of the session. But my sense is this back and forth action should eventually lead into a breakout, which should see us eventually taking towards the 19,920,000 mark by next week. So I'm more optimistic than pessimistic over here. Two reasons for it. One is in this entire correction, the broader market has not given up. The mid and small cap indices continue to do well. That goes to show the kind of confidence that traders have in the market, especially the hot money. And second is last week when Nifty hit the 19,250 mark, we failed to, or rather FIs did not add fresh short positions. In fact, they were covering their short positions as the market came down. So this divergence is indicating that there is a possibility that this consolidation should end anytime soon. My sense is today is a weekly expiry, so a bit of volatility is a given. But I think the risk reward is still favorable for long positions over here. 19,250 is a very solid base. Traders are advised to go long with this stop loss on a positional basis. And my sense is 19,920,000 is not too far away from these levels.
Right, Rahul, this is Vinny joining in the conversation as well. Good afternoon. You did touch upon a bit on the broader markets and the outperformance there. But, we've already seen that outperformance continue for a very long period of time. Do you think that is going to be sustainable now? Or, maybe that also will start seeing a bit of a correction?
Yeah, as the old adage goes, the markets can remain irrational than you can remain solvent. So I think the better question to ask is rather, what could be the next possible sectors which could, possibly lead the further rally from here. So my sense is, in stocks where you've netted a 20-30% kind of a return in the recent past, it's good time to take profits and move on to sectors. So on the large cap side, we feel IT is a good bet at these prices. We are advising our clients to move around 25-30% of their allocation from banks to IT. On the mid and small cap, we find the chemical space to be pretty attractive. We also are liking capital white goods, which is, Voltas is the major that we like particularly over there. And lastly, sugar as a space seems that it's getting back its sweetness eventually. So I think the best thing to do is do a sectoral churn. Move on to pockets of the market which have not done well. We feel the rally has not even started in these sectors. And I think if you have like a 6 to 12 month kind of a time frame, there is a lot of wealth creation that can happen in this space. So sector rotation is what we're advising our clients. I think that should be the ideal strategy going into the rest of 2023.
Mm-hmm. Chemicals. You spoke about chemicals. Look at Rallis. I wanted to check the charts of Rallis, SRF, and UPL as well. Most bombed out space in 5 years. Everybody is still negative, but it appears that people are finding some comfort there.
Absolutely. In fact, Rallis has formed a very solid base around the 190-200 mark. This is the first leg of the move that has happened. And the health of the stock has improved significantly over the last 1 month or so. My sense is a quick 20% return can be had quick in terms of relative scheme of things. Possibly in the next 1 month or so, we are seeing the stock somewhere around 260, 270 mark. But overall, the macro picture looks pretty solid once we cross the 250 area. So stock looks pretty solid. I think as far as SRF is concerned, this has been more of a sideways stock. This is not correct as much as some of the other names like Deepak Nitrate and the likes. But we feel that, even like this consolidation presents as a good opportunity to enter into the same. So on one side, you have agrochemicals, which are very strong. On the other side, you have the generic and the pigment players who've been doing sort of okay. It is the specialty chemical guys which have been bearing the brunt of selling pressure. I think that should also see a bit of a turnaround. So my advice is to have a portfolio approach, a basket approach to this chemical space because it is pretty diversified as per se.
Right. And, anything that you would want, you said pick out spaces which are, sectors, or look at sectors which are not already seeing a run up. But what of something like a defensive side in terms of a pharma? Is that something that you would look at in terms of any specific names in the pharma?
Yes, so pharma has not been a defensive anymore. The kind of rally that we've seen in the last 12 odd months. In fact, this is something that it is pretty overheated. We are advising our clients to take some profits over there. But I think the focus has to be on the index heavyweight reliance. Now, three things are happening in a big way. One is the open interest has shot up by 71% in the last 11 trading sessions. Second is the put call ratio is at the lowest level of last 12 months, which is at 0.37. And thirdly, the stock has not broken its 20-day EMA in the entire August so far. So my sense is a pre-expiry move is very much likely on the cards. The stock has become overcrowded as far as call writing is concerned. And whenever there are extremes, we've seen markets and stocks reverse. So Reliance is something that we are advising our clients to stay long. Even from an investment perspective, we feel we are seeing the stock close to around 3,000 to 3,200 by the end of this year. And from a trading perspective, I think there could be a short-term target of around 2650, which one can expect. As a stop loss, we're advising clients to have 2475 as a closing level stop loss for the same.
There are a couple of blocks which have happened. I just, take the names for some of them. You tell us which are the stocks looking best. There was a big block in Coforge. The stock ran up 5.5%. Max Financial saw some selling from promoters in the form of blocks. The stock ran up 4.5%. RBL Bank and Manappuram as well. Manappuram recovered off lows. If you could show the intraday graphs of all these four stocks. But what are the charts telling you, and is there a trade in any of them?
Yeah, so I would go with an IT stock over here. Like I said, we're very bullish on IT stocks, and Coforge is one of those names which we also have in our IT basket as well. My sense is this stock can revisit its 21 December 21 highs somewhere around the 5,800, 5,900 mark. So still a lot of headroom to be played upon. So from a positional perspective, from a delivery perspective, looks good. From a trading perspective, I think there's a good chance we head towards the 5,400 mark. So Coforge would be my pick amongst the names. IT as a basket is something that we are liking in particular.
Okay, Rahul, thank you so much, for joining in with us this afternoon on ET Now, and as always, giving us an understanding on the markets and what stocks to watch out for as well.